This is Alan Bush with ADMIS. In the stock index futures, we are seeing higher prices this morning. Much of the strength linked to news that the Syrian government now has agreed to the Russian proposal to turn over their chemical weapons. Also, some strength in the stock index futures after China's industrial production numbers coming in at their best rate in almost 17 months. Also, there was a recent poll after Friday's non-farm payroll report, this among primary dealers, showing that they now believe that when the Fed does taper their quantitative easing program, that it will be by $10 billion per month as opposed to the previously thought $10 to $15 billion per month. So all of these factors helping stock index futures to advance. However, we are up near critical resistance areas, and I'm inclined to think that now, with much of the good news out of the way, that we will see some pressure developing later this afternoon in the stock index futures. Over in the foreign currencies, seeing the euro currency trading a little bit lower. We did have the Italian GDP being revised lower, down 0.3% from a previously reported down 0.2%. Also, we had French industrial production coming in on the weak side, so all of that contributing to a weaker euro currency. Also, we're seeing some gains in the British pound, this after an index of UK house prices showing good gains, in fact almost at a 7-year high. And the commodity currencies, the Australian dollar and the Canadian dollar gaining, which was linked to the better than expected Chinese economic data. However, it looks like a lot of the good news is out of the way now in the Australian dollar, as it did trade above a recent congestion pattern. Also, we had the Australian Business Confidence Index coming in better than expected. So I think all the news is for the most part in as far as the Australian dollar is concerned. Longer term, we do feel that interest rate differentials will remain bearish, as the Fed tapering of QE will cause interest rates to firm here in the U.S. And in the credit markets, pressure developing. We're not that far from a double bottom low in the 30-year Treasury bond. Our feeling is that these lows will be taken out possibly within the next week or so. Long term, we feel that the main trend remains down. So any gains are likely to be selling opportunities in Treasuries. Look for additional weakness in that market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.